Let's actually put some of these points to Sanjeev Prasad, Managing Director, Co-Head, Kotak Institutional Equities. Sanjeev, of course, through his notes and his team, through his notes over the last couple of months, have been sort of, wondering about what's really going on. Right? Sanjeev, good to have you here on CNBC TV 18. I remember that one, you wrote this note and you gave some of these stocks a closer look. And I remember what you wrote on BHEL. I think you did some sort of, DCF calculations, and you said it just doesn't make any sense. So I just want to start with some of these PSU names that we have and the rallies that we are seeing here. Sanjeev, what are your thoughts?
I want to say we don't cover many of these names, but at least BHEL, which we cover, I can give you some flavor of that. So if you look at BHEL, the market cap of that company has increased about 50,000 crores since the beginning of this financial year. It's about 750 billion rupees now. And if you do a reverse math on 500 billion rupees, in terms of what it implies, it basically implies somewhere about 80 gigawatts of incremental order wins for BHEL. It take about 60 billion rupees per gigawatt, 10% PAT margin, which itself is a very high number. So it looks like the market is already assuming that BHEL will something like 80 gigawatts of increment, will get 80 gigawatts incremental order wins and will execute all that today itself. Remember, this 80 gigawatts will get executed over a period of time. So you have to discount that cash flow also adjusted for time, which means that the implied gigawatt is in fact even higher than 80 gigawatt. Just to put it in context, India's current thermal-based capacity, electric generation capacity, about 212 to 15 gigawatts. So that gives you a sense as to what is getting priced in some of these stocks. And I can give you as many examples if you want. If you want, one of the stocks we're discussing, IRFC, at about almost $40 billion market cap now. The combined market cap is. It's more than the combined market cap of UB and PNB, by the way. Yeah. And if you look at the net worth of IRFC, that was somewhere about 45,000 crores as of in FY 2023. The combined net worth of UB and PNB as of in FY 2023 was 2 lakh crores, 2 trillion rupees. So that's the context which we are dealing with over here. Clearly, there's a lot of excitement about certain stocks, but I assume that's the mood of the market. I guess many investors have stopped looking at numbers now. Themes are more important than just numbers. So we'll have to deal with it, I guess.
Is the entire are most of the names in that space so egregiously priced, Sanjeev, or are there exceptions? Because, at the margin, you also get news flow, which opens up new business opportunities, which were not there earlier. For example, the solar rooftop thing that we were discussing, the Prime Minister's comments from yesterday. And, there is movement, there's new opportunity, etc. as well.
The problem, Prashant, is that, nowadays everything floats a narrative, Clearly, the government is doing all the right things will happen in the country over a period of time. But to discount everything today and give back for that today, I don't know how much sense it makes. Fine. India will put up a lot of, rooftop solar units over a period of time. But look at the increase in market cap that has happened just today itself. Actually looks, something which is discounting a lot of. Sorry, I don't know what's starting to call. Sorry. A lot of incremental capacity will get added today itself. And who knows what is the probability of the business to start with? A lot of excitement around solar electricity generation. For example, look at the ROE of solar electricity generation. I'm talking about utility projects over there. It comes to about 10-12% ROE, which is not even equal to your cost of equity. So why are we giving value for a business which, if you invest 1 rupee, you will probably get lower than 1 rupee as the logical market cap of that business. So why should incremental value just get created just an announcement? Anyway, as I said, unfortunately, investors are not looking at numbers these days. A lot of focus on narratives, and obviously you can't write a narrative, right? It's like
I got it, Sanjeev. Sanjeev, so let's look at numbers, right? Let's, go through the numbers. ICICI Bank, the numbers are looking pretty decent. Asset quality is stable. Things have picked up. Low retail loan growth, almost 22% retail loan growth is what ICICI Bank has reported. How are you feeling about some of these private sector banks, and would you put more money to work here?
Only players will be back in say for some time. There is some value. Based on ICICI result, at least there is some confidence should be back in the minds of investors about this whole NIM issue, which has been hotly debated. So if you look at NIM of ICICI Bank, it declined about 10 basis points quarter-to-quarter, about 30 basis points on a basis. I'm talking about the domestic business NIM. So that should give some comfort that whatever concerns people had about the decline in NIMs, etc., that is not really playing out. That was really expected. There would be some decline in NIMs given the fact that you had a big increase in NIMs in the FY 2023. And if you look at our own numbers, we're already building in about a 50 basis point decline in NIMs in FY 2025 compared to FY 2024. So we're already factoring in all these issues. But despite that, all these banks are delivering pretty decent numbers in terms of loan growth is really required to robust for most of the banks are doing about 80-20% loan growth now. And ROEs are in the range of around 15% plus minus for most of the banks. And multiples are actually quite reasonable. So if you look at ICICI Bank,
got it.
All right. About 1 rupees, which is the value of its non-bank business, we're able at about 2.5 to 2.6 times, on a very forward basis, which is not too bad in the context of whatever valuations you are seeing for some other sectors at this point in time in the market.
Yes. All right. Hi, Sanjeev. Good morning. Sanjeev, final question before we let you go. Give and take everything, what we have seen in earnings season so far, I think assumptions were for mid-teens earnings growth. Do you think that's at risk or do you think that's gettable?
Well, see, so far the numbers have not been that great. If you look at the volume numbers of the consumer companies, quite disappointing compared to even the muted expectations that Spring had. Whether it is the paint business or toothpaste or Colgate or the broad-based numbers of with 2% volume growth, there is a struggle as far as volume growth is concerned. And banks numbers, some disappointment HDFC Bank, which anyway is reflecting in the market price over there. Other banks, I would say, broadly seem to be okay. And I'm talking about other banks, as ICICI and KVB among the private banks. Can't comment on the quarter, obviously. Reliance was marginally better than our estimate. So yeah, so nothing very shocking in terms of all the surprises, but really some disappointment as far as the consumer sector is concerned. Unfortunately, that trend has continued for the last 4-5 quarters of really muted consumer demand, which was there in staples, seems to be now there in the discretionary part also.
Okay, all right, Sanjeev, thanks so much for joining in. Putting some caution on board as well. We appreciate that. Looking forward to having a chat with you soon. But a good point is you're fairly impressed with the earnings that have been delivered so far.